Check, check, check. Good morning, everybody. Happy Monday. We are back in the saddle. This is the morning show here on Stock Market TV. I hope you all had a great weekend. I did. JC did. And you did. I'm just deciding that you did. What's in store for us this morning? We have Jason Purrs on the show. We have Raghee Horner on the show from Simple Trading. So it's going to be a futures-heavy show, I suspect, this morning. Speaking of futures, we'll do a rundown in a couple of minutes here, but look at the dollar. Ooh. How about Bitcoin? Up above 100? Close. We're back at the scene of the crime. I got JC in store. I got Strazza lurking around here somewhere. So let's go ahead, get the show on the road. Good morning, chat. Let's go. Where's that like button? Hit it for me.
All right. We are back. Excuse me. We are back on the morning show, and the dollar is getting the crap kicked out of it. You heard it here, folks, ladies and gentlemen. What did we say? We said if this dollar rolls over, equities rip. And I was told, but JC, that's an uptrend in the dollar. You know, you never fight trends, JC, is what they told me, Spencer. Didn't they tell me that? You don't fight trends, JC. Well, I guess you thought wrong, because I fucking do fight trends. But you know what? I only fight trends when I have a good reason to do that, a very good reason. And I only fight trends when I have very specific risk management procedures in place where I know what the market will have to do to invalidate our thesis. I don't fight trends if I don't have those two things. Guess what we have? Those two things.
Oh, you took the words out of my mouth. Damn it.
I don't understand. Do you understand the words that are coming out of my mouth?
Okay.
We fight trends. There's nothing wrong with fighting trends, but you better have a good fucking reason. And we do.
If I could quote a one JC Parets, I would say, let's let him dance. It's been like a couple hours, right? It's been let's let him dance a little bit. It's been literally.
It was whipsaw hunting season.
It's been 3 hours.
Was it not whipsaw hunting season? Were we not hunting for whipsaws? Did the United States dollar not present us with the best opportunity to take advantage of a potential whipsaw? I believe it did. We are Saints of Los Angeles. We are. I've been listening to Motley Crue for 4 hours. I'm fired up. Fired up this morning.
Why have you been awake for 4 hours?
Because I'm an animal, because it's a new year. Let's fucking go. Hit it, Spencer.
Oh my God. All right.
And now we can take a deep breath. I am fired up, though. Man, I am stoked for the new year. Like, seriously. If you're not stoked for the new year, if you didn't have one of the best years of your entire life last year, man, what are you doing? What a time to be alive. Are you not watching the fart coin? The fart coin is bigger than most of the stocks in the Russell 3000. What a time to be alive. Let's go. Dow futures up 180 points this morning. That's almost 0.5% to the upside. 43,200 for the Dow. S&P 500 futures up 80 bips. That's 50 handles to the upside, back above 6,000. NASDAQ 100 futures leading the way, up a full percent this morning. That's 220 points. 30-year bond futures are flat, back to 113. Crude oil up 50 bips, 74.5 for crude oil, by the way. Copper up almost 3%, back towards 420. Gold down 0.5%, 26.40. Silver up 2% this morning, $30.60. With the volatility index back towards 16. Over in funny money land, you've got Bitcoin pressing up against 100,000 again. The high this morning was 99,857. Right now we are at 99,233. Ethereum. So Bitcoin up 1%. Ethereum pretty flat this morning, 36.5. Solana up 2%, 218 to the upside. Binance, 717, up 1%. With the total crypto market cap, Mr. Spencer Israel, 3.44 trillion. And may I remind everybody that 2 years ago, it was 750 billion. 750 billion is where we ended 2022. 2 years later, here we are, 3.44 trillion. How you doing?
It's been a pretty good 2 years. What's that song? It was a very good year. It was a very good 2 years, right?
So we went back, as one does, and we counted every time that the stock market, the S&P 500, did this well 2 years in a row.
Yeah.
And we were curious as to what stocks did in the third year after.
I'm also extremely curious. Tell me.
Enlighten me. Turns out they went up every single time. Every time.
But did they go up as much or less or more or what?
The average returns, let's see, I'll give you we have the data.
25% 2 years in a row is pretty good.
It was an average of 10.5%.
All right. Honestly, you'll take that. That. I'll take
average
that.
Returns.
What?
That's above average returns.
I know. I said you'll take it. I'll take it.
Also, if I might add, in 2023, the S&P 500 went up 24%. In 2024, the S&P 500 went up 23%. I mean, shit. If you don't think this is a simulation, then you're not paying attention, right? Come on.
I don't know anything about
23, 23% and 24. You think that's a coincidence?
Yes, I do, actually.
I don't know. What do you guys think in the chat? You think this has simulation written all over it? I don't know.
No. But no, look, as Sean and I discussed on Friday, I did my end of year review over the weekend. And yes, it was a very good year. It put me in a very good mood. No surprise. We all made money last year. It was great. Right? So, but let's turn the page. Let's turn the page. Last year was old news. Let's turn the page this year. So you've got a weak dollar for.
Why don't you throw up slide 2?
About 3 hours this morning. You've got a weak dollar.
Why don't you throw up slide 2?
Right? So it's early yet. Well, it's slide 2. Okay, yeah. Yeah, that's where we are.
Do you think it's a coincidence, Mr. Spencer Israel, after spending so much time with us over the last several years, that the United States dollar just stopped going up as soon as it hit the 61.8% retracement of the entire decline from the 22 highs down to the 23 lows? Do you think that is a coincidence?
Well, I wouldn't say as soon because it did breach it for a minute, right? But yeah, look, the biggest thing I've learned from you guys, well, I guess there's a number of things, but if I had to make a top 10 list, it's all about finding levels of potential interest, right? I think that's what Brian Shannon says, right? Levels of potential interest, and Fibonacci is a great way to find levels of potential interest, right? So, do I think it's a coincidence? I don't know. I've seen it enough to know that Fibonacci numbers, they come into play. Sometimes they don't. Sometimes they do. They come into play enough to matter. So if you're trying to find a level of interest, you could do a whole lot worse than Fibonacci.
And then here, let me get back to why we were fighting trends, if you will, here with the dollar. And that is because it's not just about price. And I understand price is the only thing that pays. Price is the most important technical indicator. I know. I'm the one that says that all the time. So no arguments there. But what I will say is that what drives prices is not the fundamentals. What drives prices is the positioning. And in many cases, in the best cases, in the biggest moves, in the mispositioning. So here in the United States dollar, you've got the dumbest money in the history of Earthlings betting on a rising dollar. Dumbest money ever, betting on a rising dollar. The smart money, on the other hand, is betting on the exact opposite. They're betting on the euro going higher.
The dumbest money is not betting on a rising. The dumbest money ever is not.
Dumbest money ever, yeah.
No.
What do you mean? We know. We have the data. What do you mean?
No, the dumbest money ever doesn't
Small
even know what.
small speculators in the futures market are the dumbest money on the planet. We know. What do you mean?
No, dumbest money on the planet are like the Robinhood traders.
The Robinhood traders don't matter, you see. So these are the dumbest money on the planet that actually matters.
Oh, there's the caveat. Okay.
Yeah, there's a caveat. Sorry. No, you're probably right.
Okay.
But small traders on Robinhood, no matter how right or wrong they are, they can't move the market, right? They don't matter. But actual professionals with real assets under management are equally as dumb. They just have more money to screw up, right?
Got it.
Equally as dumb, but can actually do something with their stupidity versus someone with a $10,000 account. God bless them. It's not a hate. God bless. You want to take the other side of those people, of course, particularly at consensus, but they can actually move markets. Small speculators in the futures market are actually moving markets. And those that are taking the exact opposite side of that, which are the commercial hedgers, are the longest euro that they have been in years. And here's the euro coming in. Today, I would argue is the first day of the year. Realistically, right? Because so many interruptions over the last couple of weeks. But euro coming in hot, up 1% on the day. Dollar getting the crap kicked out of it. Worst day in 4 or 5 months.
Again, let them dance, right? It's been 3 hours. Like, what?
It has not been 3 hours. What planet do you live on, Spencer?
I'm looking at the Dixie right now.
First of all, the dollar peaked on Thursday.
Yeah, okay. If you're going by the peak, sure. I mean,
you want to talk about today's session? So today's session,
it was pretty flat on Friday, right? So
today's session opened last night and has gone straight down since then.
Whatever.
So that is 6 hours, 9 hours. I don't know. It's about 15 hours. Are you not entertained? Is that not enough for you? We're in fact, we're almost done with the day. The day's almost over. And you're trying to tell me it's only been a couple hours. What's the matter with you?
No. Do not tell me the day is almost over. The day has just begun.
The day's almost over, bro. Most of the stock exchanges around the world are already closed. Europe closes in a couple hours.
But the exchanges that matter haven't even opened yet.
That's not true. Who says who?
It says everyone.
Well, the futures market, which is arguably the market that matters the most, it's the biggest market, opened 15 hours ago. What do you mean? Right. Come on, Spencer? You're going to have this debate with me? The most important markets, the largest markets.
I don't want to argue. I don't want to argue this.
The one that we're talking about here, by the way, the one that's $4 quadrillion in market capitalization, which is the forex markets, has been open for 15 hours.
Okay. No. Now we're losing the plot.
Are you talking about this Piker $60 trillion stock market in America that you speak of? Is that what you're talking about?
Oh, yes, the Piker U.S. market. That's what I'm talking about.
Measly $60 trillion. Is that what you're talking about? Versus the forex market that is $4
those Americans, they got no money. The American markets, man, they're broke. They suck.
Nobody said they suck, but in terms of size and magnitude and importance, it is a tiny fraction of the $4 quadrillion forex markets. Come on.
Okay.
No?
Oh, you sure? Yes.
I don't even know. I mean, I can't even fathom how many zeros and commas are in $4 quadrillion. Like, it's so many commas and so many zeros. By the way, shout out America. I have a fun fact. Fun fact. Fun facts are great. Fun fact. The U.S. stock market now accounts for 67% of the MSCI All Country World Index, which is a new all-time high. That's over 2/3 by my calculations. Over 2/3 of the entire MSCI All Country World Index is represented by the good old US of A. Now, here's what I will say about that. It's not America's fault that the other countries can't keep up. You notice? It's like, oh my God, this is unsustainable. Which part is it unsustainable? That the U.S. keeps dominating or that the other countries can't keep up? Which one is unsustainable?
I don't know, but I want to answer your question with a question. How do you feel about those stats that are like, well, if you just subtract NVIDIA, actually the U.S. underperformed the global markets last year or the last 2 years or whatever? How do you feel about that?
Well, I that's not true. Number one,
I may have butchered the stat. There was some stat was going around there about if you just take NVIDIA out, it wasn't as good.
Take Michael Jordan out of the Bulls from the 90s. How many championships did they win?
Right, exactly. Right. Yeah.
I mean,
That's
the year Tom
that's
Brady got hurt and they brought in whatever his name was.
yeah.
When he got, how did the Patriots do that year? In fact, it was the only year the Dolphins won the division in Brady's entire career, actually.
Yeah, that's how I feel. You can't just take a company out, right? Just because it fits
Like
your
you can
narrative.
just go team by team, all the greatest things of all time. You take out their best component or one of their best components and be like, well,
Yeah.
if you took this guy out, they would not be as good. Yeah, no shit.
That's how I
So
feel.
what?
But people see this stuff and they use it to justify like some sort of bubble perspective, right? Or bubble narrative.
They do that psychologically to make themselves feel better for being so bad at this.
Yeah,
right?
being underinvested. Sure.
Yeah, like think about it. Like let's say if you hadn't owned Bitcoin, right? Remember, for me, it's easy to say this because I was orange pilled in 13. We are now in 2025. I was orange pilled almost 12 years ago. So it's easy for me to make fun and da-da-da. I was skeptical myself, right? But nevertheless, right? I've been in for a long time. Imagine if you had not. Imagine if instead of taking the time and effort to actually learn and transact on DeFi exchanges and then just do Web3 stuff, buy NFTs, borrow against it, swap, go to decentralized exchanges that you have to run through hula hoops to get through. Like imagine if you hadn't done those things and instead just decided to go on social media and complain about Bitcoin and how it's a Ponzi scheme and how it doesn't make anything and it doesn't serve a purpose and blah, 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 right? Like all the nonsense you've been hearing for over a decade. Imagine if you were one of those instead of just being the one learning, right? Because all of those people complaining don't know anything about Bitcoin or cryptocurrencies because they've never actually transacted or participated. So they're just angry, right? And you still see this today. Imagine if they would have spent all that time and energy into actually learning instead of just complaining like a little bitch. That's how I see it.
I still don't understand.
When you're like, one of these like, think about it. When you're one of these like mentally ill people, which there's a lot of mental illness out there, we know it's been well documented. When you're mentally ill, are you going to think logically, admit that you just made a mistake and try to do better next time? Or are you going to go online and just be an asshole?
Yeah, look,
mentally ill, choose the latter.
Whenever I think too hard about Bitcoin or crypto, I always end up with like this shit makes no sense, but it doesn't matter if it makes sense to me, right? Like,
also,
I might as well own it. It's like a new asset class. I might as well own it, right?
Also, here's the thing.
Upside, right?
Also, here's the thing. These people just don't like having fun, right?
Oh man.
If people would just have more fun and stop being so angry, they'd be making a lot more money in crypto. You know why I am a crypto dick butt? What is it called? I'm a crypto dick butt whale. Crypto dick butt whale is what I am. You know why? Because it was fun.
Yeah,
it was fun. These things, crypto dick butts are pushing up against all-time highs. I own a ton of these things. Why? Because it was fun.
You mentioned the fart coin this morning. You failed to mention the outperformance of Butthole this past few days.
Oh, we're getting intrasector rotation between the fart coin and the Butthole.
I think so. No, but you're absolutely right. In a lot of ways, markets investing is fun, just like sports are meant to be fun. And if you're not having fun, then what are we even doing here? What are we even doing here? Right? Yes, we want to make money, but we want to have fun doing it. Right?
You got to have some fun. Like, have you seen the movie The Sandlot, Spencer?
Of course.
So the movie The Sandlot, there's a one particular character, Smalls, and then there's Benny the Jet Rodriguez. Smalls has never played baseball before because his dad's too busy to teach him. And then Benny the Jet Rodriguez ultimately makes it to the major leagues. He's a local hero and legend on the baseball field. And so Benny the Jet Rodriguez goes to a Mr. Smalls who just was not playing very well and not having any fun. And he goes, I bet you got straight A's in school. And Mr. Smalls says, well, I got a B once. And then he's like, stop thinking so hard. Just have fun. And then what happened? Smalls starts having fun. They beat the rival team. They all go to the carnival at night and throw up because they were doing the tobacco thing, tequila, right in the roller coaster.
Oh yeah, it's one of the classic films of my childhood for sure, no doubt.
Have you seen the making of The Sandlot?
Nope.
So there's a great series on Netflix. I don't know if it's still on Netflix. I watched it years ago, but there was, and you can still say, I think it's called like Movies We Grew Up With or something like that. And it's like all about the making and the behind the scenes of making of that movie. It's like Home Alone. It was like Home Alone, Sandlot.
I've seen an episode of that.
Gremlins?
Not this one, but yeah. I feel like I've seen an episode or two of that.
It was good. So like it was fascinating, especially if you're a fan of The Sandlot and like you learn like how they did it, like the fireworks, like in the 4th of July scene, where like with these like filters of different colors. It's fascinating. And like none of these kids were actors; they were just like young kids that they got together for a summer.
Just random kids. Yep.
Pretty much. Even though a few of them ended up like doing other movies and like getting addicted to crack and stuff like that. But they all went on to do other things. Some better, some worse.
Okay. Before we bring Kenny on, let's walk through a couple. Do we have any more charts from the morning? I mean, is it just the story of the dollar today? And I know there's a headline. There's always a headline as it pertains to the dollar. And this morning it's tariffs. Not going to be as big and bad and ugly as they said. I don't know.
Wow, I can't believe it. Dude, all these people with their tariffs. The latest? The latest is oligarchy. That's the latest. Like, what's the strategy to profit from the United States becoming an oligarchy? I swear to God, this is the latest one. This is like the taper and the sequestration, right? All these things, all these silly things.
All I know is if I have to read one more goddamn post about people who are going to cash, I might kill myself.
Are a lot of people going to cash?
On the internet, on Reddit, we're in a bubble. I'm going to cash. I can't take it anymore.
Remember when they were all going to move to Canada? Did anybody actually move to Canada? I don't know.
I don't know.
Like, funny, people did move from California and go to Texas. Like, that actually did happen.
That did happen.
That did happen. Nobody moved to Canada. But people did leave California and move to Texas. I thought that was pretty hilarious. So why don't we talk about the old Santa Claus rally? Had a gentleman, gentleman's probably a strong word. I had an avatar on the Twitter X. Tell me, oh, JC, how come you haven't mentioned the Santa Claus rally in your latest blog post? I'm like, literally, my latest blog post starts with the Santa Claus rally. So shout out to the internet trolls. We love you. So here's the Santa Claus rally period, which of course every year includes the last 5 days of the trading year and the first 2 of the following year, 7 days. And if Santa don't show, that's usually a good indicator that you're going to have a chance to buy equities at cheaper prices later on in the year, right? So here it is. Dow down about 1/3%. S&P's down about 0.5%. Q's down 1%, right? So Santa didn't show. So this is indicator number 1 of the 3 January indicators that are good friends over at the Stock Traders Almanac called the January trifecta. And if you go to the next chart, this is the next one. This is the first 5 days of the year. We are now 2/5 of the way through the first 5 days of the year. After today, it will be the 3/5, the 3/5 compromise. Did you ever study that in college or high school?
Yes.
Do they teach the 3/5 compromise in New
Jersey?
Yeah.
Let's not go there.
Are we allowed to talk about the 3/5 compromise, or is that against the law?
Let's just keep going. Let's keep it moving.
Yeah. Is that how you get canceled, by talking about the 3/5 compromise? So 3/5 after today of the year of the first 5 days of the year will be completed. 2/5 so far, and so far not bad. You got the Nasdaq 100 up 2.5% already through this morning. You've got the S&P 500 up almost a full 2% as well. You've got the Dow up over a full percent also. So so far, the first 5 days of the year indicator, very positive. As they say, so goes the first 5 days, so goes the rest of the year. So I ask one Jeffrey Hirsch, editor of the Stock Traders Almanac, of which we'll give him a shout out. Stock Traders Almanac.
There you go.
Boom. So Jeff Hirsch was a guest on our show last week, and I asked Jeff, what is the more important indicator? Is it the Santa Claus rally, or is it the first 5 days of the year? And you know what he told me? He said neither. It's the January barometer. So of the three, the one with the best hit rate is the January barometer, which goes as goes January, so goes the rest of the year. And so last year, Santa didn't show. The first 5 days were down last year.
I remember that.
Yet January was up, and the stock market had a better year. So shout out Jeff Hirsch for that. So just want to give some perspective. Again, we are buying stocks, not because of the Santa Claus rally, not because of the first 5 days or the January barometer, because we're only 6 days into the new year. So that's not even relevant yet. We are buying stocks because it is a bull market. And you see, Spencer, I have studied every bull market in history, believe it or not. Every single one ever. You know what I found? In those bull markets, the investors that owned stocks were rewarded way more than those investors who were selling their stocks. In all of the bull markets, that was the case. Isn't that a fun fact?
That's usually how they go.
You'd be surprised at how many people, you yourself said how many people are running to cash. Perhaps those people did not study every single bull market, where they could see very clearly that investors were very much rewarded for owning stocks versus those who were selling stocks. They were penalized for doing that, you see. And this bull market has been just like that. So with the US dollar rolling over, if that US dollar breaks 107 on the USD index, holy shit. Like in Animal House, like when they took the bar, holy shit. When what's his face? Belushi?
Yeah.
They took the whole bar. The whole fucking bar.
You know,
right?
I grew up with a kid named Eric Stratton. Fun fact.
Stop it.
I swear to God. I swear to God.
Was he kind of douchey, or was he?
No, he was a super nice guy. Wait, let's bring on Kenny, all right? And then we have Raghee Horner in the house. Kenny, where you at?
It's been a long time coming. They ain't come for my clock, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Oh, Kenny Glick in the house.
I don't know what you guys are talking about. I love it. I love it that I'm in a whole different planet.
Which planet?
The one where Santa Claus came. He's still hanging out in my house doing bong hits. What's happening here? I mean, are you guys nuts? It's every day is Christmas or whatever holiday you celebrate. It's Kwanzaa. It's
Santa's currently taking bong rips at the Glick household.
Yeah. And whether we have him in a cage in the basement. So, give me a FUBU right now. So, it's funny. I was sending out the email this morning, and when I first got started in the industry, as a shady stockbroker, or back in the 5th grade when I started learning about stocks, if you made 8% for the year, you were a hero. 12%, you were something special. 20%, you were otherworldly. We have stocks that are going up 200-300% a day. I got in front of these robotic stocks before the entire internet got involved. And by the way, thanks for giving that the Yahoo Finance gig. So when I was on Yahoo Finance, I coined it the robots, rockets, space trade. They're going to have me back on next week to talk about these RRs and these serves and all these stocks. But fast forward to just today. You guys know about FUBU, right? Another one coming out of the Andy Dufresne. Take a look at this chart, my friends. Another one. So FUBO. Right? It's every day, friends. So yeah, we got in front of these robotic stocks and the quantum stocks and all that stuff. And again, somebody was talking about fart coin. For the last 3 weeks, I thought you guys were joking that there was actually a thing called fart coin. That's how removed I am from that scene, because it's just, there's so much going on in this market that it's just absolutely extravaganza each morning. But take a look at FUBU, friends. All you need is the catalyst. When you come out of this Andy Dufresne and you run and you start breaking these yearly VWAPs, you got room to go. And look at this one this morning. This is just absurd now. You guys know about this stock? Of course you do.
Fubo
yeah.
TP
So
up 181%.
there's news this morning. That's why it's up. Obviously, it's up.
Right.
Yeah.
Right. Now, before we go patting myself on the back some more about that Carvana long in the beginning of the day and the short at the end of the day, let's talk about Sedge. I gave this one to you Friday. I saw some late day buying over the last couple of days. Institutional people show up at the end of the day. So when you see buying at the end of the day, you know there's something going on. Welcome to the Andy Dufresne pattern. It strikes again. This one, we've been waiting a long time for Sedge to wake up, and now here we are. Now, what are we going to do about it? I'm selling. So if you got some $16 calls that we bought last week at the open, they should be up about 300 or 400%. Take some profit at the open. But I think finally, if we can get this stock to close above even 1750, we're on our way to that 1950. And then I still think the stock's going to 3250. But what a morning. I mean, it's really every day. And I hear you guys talking about it. Everybody's making predictions about the year. Stocks are doubling and tripling and quadrupling every day. So it's hard to want to talk to my dad about, 12.5% gains at this point. But, here we are. I mean, it's something special going on right now.
Give us one more. Hold on. I just want to reiterate. Remember the troll, the internet troll, telling us about how smart he was because that quantum stock that we did so well with had nothing to do with quantum, that it was just a medical device company.
Right. And he made the point that we were trying to make. Yes.
Thank you, internet. Thank you, internet trolls, for being so stupid. Thank you. Thank you.
I'm surprised there's only one. Again, I like the combative nature of stock tweets. It's kind of like falling away. There used to be more of that. Everybody was always fighting with each other, and that was fun for a while. But
now they're on Twitter. They're doing that on Twitter now.
Oh, is that what's going on?
Oh, I'm getting trolled on LinkedIn now. That's the latest.
No, really? Wow.
Oh yeah, that's the latest.
We keep it professional. We don't keep it professional on LinkedIn.
Listen, if you want to be an angry old man, like if you want to spend your retirement years doing something effective, go on LinkedIn and just troll others. That's how to do it. It's a good retirement plan right there. I'm telling you, they're out there just trolling people on LinkedIn.
I like trolling people. It's like every time, like I'm on these stocks that are always up these percentage gains each morning, right? And there's always the same commentary about how we're crushing the bears, the short squeeze is on. It's not always a short squeeze, my friend. Sometimes it's just a float. Like if you look at the stock KITT, there's only 5 million shares in the float. 400,000 shares are short. It's not like it's this massive short squeeze. It's just that there's no stock available and everybody's running to the keyword of the day. And that was, robotics over the last couple of days. And then they go looking for other ones. And then it's just the shiny object trade continues. So when I see FUBU going and SCDG, that's where you're going to focus your money on today. And look at the stock. I was in this thing just before we got on at 250, selling at 280 and 3 and patting myself on the back. It's 475 now. So I'm almost speechless, my friends. It's every day we find these stocks. And listen, I got a whole list of them, but soon we're going to be talking about earnings. I don't know if I'm going to be able to break away from this pre-market action lately because, Delta's coming along and JP Morgan's going to be reporting next week, and I want to focus on those. But this is where the money's at, and I was kind of joking around about, hey, if it breaks 250, it probably goes to 5. And here it is. This is absurd, but this is the way the market's working now.
Yeah, we got the Sedge. As soon as I saw Fubo, I thought of you, Kenny.
I know. Hey, listen, I like the Sedge. I do, because listen, this one has options. You don't have to worry about it going to 0 now. We got some call spreads on. If this can close finally above even 1650, it's a nice little base. I think we can build from here. But, if you guys are in the FUBU, I don't know what to tell you at this point. I guess sell, I guess. It's up another 100% while we're doing this thing right here. So just nuts.
All right, guys, listen up. Today's the last day for Kenny's Santa rally offer. Santa didn't come for the market, but it came for Kenny's room. So
I don't know. The cues look pretty freaking good. I don't know, man. Maybe I'm in my own little world, but the market seems awesome. If we continue at this pace, I don't know. We're looking at 2.6 million%. I don't know. I'm going to have to compete with Fartcoin. We'll talk more about Fartcoin some other time. But I got to get out of here. Listen, people are trying to figure out how I keep finding stocks that go up 100% on the day. Be good, my man.
Use the link in the chat. Get in Kenny's room today because the price is going up. I'm not going to say when, but it's pretty freaking soon. This week, like tomorrow, maybe. So there it is. The link is in chat. get Kenny's room. It comes with, you get a script, you get a screen, you can see what he's doing, you can follow his trading from basically 8 in the morning all through the morning, right? And then after hours as well. So he's finding winners every day.
And let me tell you something, guys. I am, especially as I've gotten older in my career and accumulated more wealth, I have gone out of my way to look for strategies that are complementary to the other things that I'm doing. I own real estate. I've got retirement accounts, children's college funds, long-only accounts. I'm in, right? I'm going to buy more real estate. I'm going to buy more stocks. I'm in. I am focused my attention on looking for additional strategies that are uncorrelated to those things that I'm already doing. I'm in no matter whether I like it or not. I'm in. I got the real estate. I got the stocks. I'm in. I need the other things. And Kenny's exactly that. If you are a firm believer in the Holy Grail, the Holy Grail actually does exist. And that Holy Grail is, according to Ray Dalio, and it's just math, right? It's not an opinion. It's just math. You want additional strategies. Ray Dalio thinks 15 strategies is the most ideal. Now, we live in a real world where that's not,
it's too many strategies.
Well, there's a law of diminishing returns. After you get to 4 or 5, each additional strategy only helps by a little tiny bit. So the key is 4. 4 is the number. You want 4 strategies that are uncorrelated to one another. That is real diversification. And just to be clear, you are not sacrificing forward returns by being diversified. In fact, it's actually quite the opposite. You are increasing the acceleration of those compounding returns. You actually make a lot more money faster by being diversified if you truly are diversified, not, I own international stocks, I own US stocks, I own small cap stocks, I own growth stocks. That's not diversification. You just own a bunch of stocks. We're specifically talking about different strategies, whether you're changing time horizon, in the case of what Kenny is doing, if you're changing direction, a lot of mean reverting strategies, again, in the case of what Kenny is doing. So you're getting different time horizon and different directional bets with Kenny, which is part of the process of achieving that Holy Grail. And I'm sitting here, Ray Dalio tells you that, Chris Kane tells you that, I'm telling you that, simple math will tell you that. I'm a firm believer, and Kenny's great at that. On that note, I am out.
What?
I'm leaving. I got a monthly conference call tonight that I need to prepare.
Oh, I forgot. Oh my gosh.
Drop the link. If you are a premium member of All Star Charts Research, I will see you tonight. And if you are not a premium member of All Star Charts Research, then your life has gone horribly wrong. What are you thinking? First live conference call of the year is tonight. Be there or be square.
All right. In that case, I'll just bring on Raghee Horner and talk to him myself. How about that?
Jay, we've been friends for a long time. Make the call.
This is pretty professional, guys.
Nice show you got going here.
Raghee,
how you doing, my friend?
What's going on? Long time no see.
I know. I love it. I love this. I love the background. I like the energy. Thanks for having me on.
I'm trying to just match his energy this morning. So, welcome to the show. If you guys don't know, Raghee Horner, managing director of futures trading at Simpler Trading. And if I recall, you were a very, very early buyer of Bitcoin, right? Like very early.
Gosh, we won't go there, but yeah,
we won't go there. Okay, we won't go there.
No, I'm fine with that. 2016, but only because I was already trading forex, and I just figured crypto was digital forex. And since I've been doing forex for 14 years, why the hell not?
All right, I think you figured it right. I might as well ask you about the dollar, since that's, I guess, the theme of the morning here. Is this just one morning? Should we not overthink this, or should we definitely overthink this?
The dollar, moving higher. The euro's been, whenever I'm looking at the dollar, I'll look at the euro. Because the dollar, for those folks who don't trade currencies, it's a basket of stocks. It's basically 58% euro. So that inverse correlation is the euro. So if I take a look at the 6E or the Euro US, it's having a good day, right? That's it. But it had a good day on the 20th of December, and it had a good 3 or 4 days at the end of November. If anything, the dollar's got a chance to start rallying if we don't start to see more than maybe a 1/4 point, maybe a 1/2 point cut for the remainder of the year. It kind of makes sense that the dollar might shore up a little bit. The rate cuts are, for the most part, done.
But are you in the camp as JC, which is lower dollar? You're just an outright buyer of stocks. That seems like a pretty safe bet to make, right?
I don't mind to be short euro, which is the same thing. I don't mind to be long
Okay.
dollar. But as far as the equities go, I don't want to be a bear in equities. I don't hate my money. So yeah,
Right.
long equities, yeah, no doubt.
All right. Give me like the top 2 or 3 areas of the market that you're that have like your most attention right now.
Right now, it's just anything with a trend. We had so many trends in November after the election. Q1 of last year was about the easiest 3 months since 2020. I'm just waiting for trends. So really organically, I'm doing less right now. Right now, other than some day trades, I've been flat as a pancake since OPEX in December. So I'm just been enjoying some time with my family, enjoying the end of the year. And
So
we have this
you are one of those people that will actually just go home flat and be done with it and just wash your hands, right? Obviously not in all your accounts, but in your trading accounts, right? You're just
in my
gonna
trading account.
go home flat and start over the next day.
So my day trading account, obviously that's just today trading. But for my swing trades, my time horizon's maybe going to be 2 to 3 weeks. So by the time we hit that third Friday of the month, I get to start off with fresh eyes, clean book, and then do it all over again with that same 2 to 3 day time horizon. But right now, just wherever the trends are. And
all right, tell me, where are the trends?
So right now we've been playing things like Apple, and I play really, I'm not looking at things that are not correlated to the broader averages. So if I'm looking at a group of stocks, it's what's weighted in the NAS, what's weighted in the XLK, things like that. We're coming into earnings season, which I hate, the spectacle of, or I really do. I'm an old school trader. I remember back in the day where we would get an envelope in the mail that would tell us revenue, and now it's just become this Lollapalooza spectacle. Yeah, I hate earnings. So
They would send the earnings in an envelope?
Yeah, way back when. I'm an old lady. Yeah, there was no coverage and conference call, and it was just another day, and we didn't have these crazy gaps. And I don't think it does anybody any favors, but nonetheless, here we come into earnings season again. Financials are kicking in, so I'll be leaving financials alone until after earnings. For now,
that's like we got like a week and a half for that. I mean,
right. Yeah, and I might have something, but mostly probably things like Apple, Amazon. That's a lot of what we did.
Right.
I'll day trade Bitcoin a little bit. I'm just really staying very nimble. I don't know what's next, right? We still have Thursday off. We still got the
oh my gosh, I keep forgetting.
You're right. We got a day off, so don't plan any guests.
Wait, okay, so the market's closed on Thursday. So does that mean that, not that you would know this, but do they have to reschedule? Not that there's I know, like, let's see, isn't like KB Holmes supposed to report earnings on Thursday? Is that all canceled now? I don't even know.
That's a really good question. I don't know. Yeah, I know you're an earnings guy. I would imagine probably not, because obviously no one planned for that Thursday to be off. So
does anyone know what happens if to schedule earnings reports on a day where the markets are closed? That's weird.
Sudden close like this wasn't,
Yeah, that's true. I guess we'll find out. Okay, so you hit earnings season. So, Britt, what's funny is, like, I feel like when I started, earnings season was very concise, like, period. And now it gets longer and longer, like, every year, to the point where, like, it never really ends, right? It just, like, kind of leaks into the next one slowly. So anyway, you've got, like, basically the next, like, 6 weeks of earnings. So what are you going to do for 6 weeks?
So I don't mind to play a rally into earnings. So what I'll do is I'll look at a calendar, say Estimize or something, and look at what's 4 to 6 weeks out.
Yeah.
That rally into earnings. Oh, don't get me wrong. I love the psychology leading into earnings. The actual day, that binary, 24 hours out. No, I'm too old for that. I got enough gray hairs as it is, which I can see really well on the camera. So in terms of what my timeline's going to be, 4 to 6 weeks out, take advantage of rallies into earnings, and then I'll be flat going into the actual release.
Yeah, that's actually my preferred way to play earnings. I love earnings, but yes, I like I like playing the move into earnings, or even like letting the dust settle for 3 to 4 or 5 days, and then reload, right? But that day of, and then those days after can be, as we all know, they can be crazy. So low key, if you're not paying attention, it pays to look at the calendar. It pays to look at the calendar, and then it pays to look backwards as well. And be like, oh, didn't they report like 2 weeks ago? How are they doing? right? Wasn't there like a huge gap up or gap down? How's that holding up, right? It pays to go back. So
I was thinking of IBM just last year. I had a great 6 weeks. IBM was on fire. Earnings comes out, it gets punched in the mouth, and that's the stuff I want to avoid. I mean, there were quite a few in Q3 that had those kind of great trends, those 4 to 6 weeks before release, beautiful swings, and then just get flat when that binary event occurs. And yeah, a lot of them are ugly.
Yeah, I mean, and Rachel, I don't do a ton of day trading, but I do some, and I do some swing trading as well. So that's kind of how I approach the earnings season. Raghee, what so you said Apple, but like what are there specific areas of the market that like have your attention? Are you looking at like growth over value? We're looking at the US over international, we're looking at tech over everything else, or what?
I've been interested in commodities a little bit more lately. Crude oil started moving, got through 71. Was it last week on crude oil futures? I'd like to see that wake up oil and gas explorers, but crude oil's on its way to about 75.5, which I'd really like to see it get through. I'd love to put CL back on the radar, whether that's through USO. I'd like to see Exxon and Chevron start tracking. I have a very boring list. So when I'm looking at my trades, I'm looking at where the indices are the strongest. Regional banks and say the Russell had a really good few quarters. As soon as that trend is done, I leave it alone. Financials had a really good November. Energies had a really good November. And then in December, everything started to sort of self-destruct. So I'm just waiting to see what catches a bid again. I'm not looking for a lot of sector rotation. I think that, healthcare like XLV was a dumpster fire last year. I don't expect any miracles into Q1. So I'm just going to look for whatever managed to hang on to that December meltdown. I mean, Santa didn't not come, right? I've been hearing a lot of Santa missed us, and maybe not. I think Santa showed up in November.
Oh,
right. So we have this split up 4-year cycle. Santa said, all right, this is when I'm coming down the chimney. And that was it. So December, we saw some window dressing, a little bit of a performance chase, some tax loss harvesting. And now we're looking at January, wondering what to do.
That was also, I mean, there was an election. So you think that was all kind of combined into one end of year November rally?
If you look at the strength after the election, I've got to believe so. We wonder about that, right? We know we're going to see a dramatic move in November, but if there was going to be a performance chase or any kind of realignment, November seemed to be the more logical month to do it immediately following the election. It seemed to fall into that pattern. So we know every 4 years we're going to deal with it. And that was that. So next year we can go back to waiting for Santa.
What do you make, speaking of oil, what do you make of the divergence here between oil and some of these, major energy stocks, Exxon, Chevron, these past few weeks?
The last time OPEC opened their mouth and the last few EIA reports we've been getting, the demand for crude's just been really disappointing. So then we had that little bit of rally in November because we're figuring the regulations on energy stocks and even financials were going to be a little bit more lax. But interestingly enough, that fell apart in December. So initially, I think energy stocks got a nice boost. Initially, crude oil got a little bit of a boost. OPEC started talking. It talked it back down. But now that we're in the new year, it's kind of big. So the why of it, I don't care because OPEC's going to do a lot of things before they actually make it public. I'll be curious what ongoing inventories are looking like for at least a 4-week moving average, but it's hard not to be a bull right now.
What aren't you a bull in? There's got to be something.
Solar. I'm not a bull right now in financials. Financials are pretty ugly. That's it. And really right now, I'm not a bull in regional banks. And KRE was a great moving name last year. Russell got moving and it's not been really catching a floor and a bid quite yet. It's just a lot less. I was long gold for most of last year, and now
was a great trade for most of the year for like 11 months, right?
and then in just November, it just fell out of bed, which is really heartbreaking. But
yeah, gold had outperformed stocks until election day, right? And then it obviously didn't after that. So
and this is, I think, where for a lot of us that have say 2 to 3 week time horizons, where we knew what we were dealing with in Q1. Q1 was the gift that kept on giving. Q2 last year just really sucked because a couple Fed members got preemptively hawkish in front of the September rate cuts. But frankly, anytime we're waiting on cuts, that anticipation, the getting is better than the having. because we no sooner got those 250, that 50 basis point cut, the 25 basis point cut, and it's been very, very disappointing since. Bonds are saying something very different about lower rates, have been for 3 months.
What's going on there? The bond market is calling the Fed's bluff. What's that about?
If you look at TLT, if you look at ZB futures, they are always thinking 3 months ahead. I never think bonds are in the now. They're the opposite of Eckhart Tolle. They're never here. They're 3 months from now. I think they're calling liar, liar, pants on fire to Jerome, which, whether we believe that to be true or not, bonds have been weak since October. So we no sooner get that half point cut, and they've been melting down since October.
I like that. Bonds are in the future.
Bonds are always
the bond market is the smart money, right? So
that's what they say. Look, there's big money and there's not big money. I don't know about smart money, but yeah.
Yeah, that's what they tell me. All right. This has been awesome. Raghee Horner, again, Managing Director of Futures Trading at Simpler Trading. Raghee, anything else that's sort of we need to hit on that's on your radar? That any advice as we we put the last year? It's been a great 2 years, right? And I think there are some people that are thinking, yes, it's been a great 2 years. Let's keep the party going. And there are others that are thinking, no, boy, this is destined to end poorly. And then there are those that just say, hey, whatever the price is, I'm just going to go with that. Right. So I'm sort of in the camp of the trend is your friend. So if we had 2 great years, why wouldn't we have 3 great years? Right. Until proven otherwise. But are you overthinking the fact the amazing rally we've had really since the COVID lows or since the 2022 drawdown, or are you just not overthinking that at all?
I'm unapologetically bullish. I think there's a lot about the bearish side, the perma bears. It's one of those things that sounds great. I don't know what it is about people wanting to pick tops. I don't know what it is about people wanting to see the crash and the dollar this and I'm really optimistic. I've never met a rich pessimist. I just haven't. I'm super optimistic. However, if that means that I've got to be really nimble and bullish in the short term, 5-minute chart, 1 hour chart, so be it. I'll be nimble and play short term. If the daily time frame looks like crud, and right now the NAS looks pretty good. When I look at NQ, when I look at QQQ, what's not to like? Generally that's a rising tide. But if that falls apart, I'll move out to the weekly and I'll lengthen my time horizon and take a chill. I think that folks are way too pessimistic. They're just looking for another shoe to drop. It's not just an opportunity cost to be bearish. You're losing money. And so to me, maybe I won't be as bullish in as many things, but I'm looking for trends higher.
I also think it seems like just anecdotally, most of the day traders that I've ever known are the day trading skews their mindset into becoming bearish because fading is a great way to make money in day trading, right? If you ain't fading, you ain't trading, and markets are usually going up, and fading those moves, you can make a killing as a day trader, right? But I think it can mess with your head a little bit because by and large, markets do trend higher. They go up 3 out of 4 years on average, right? But if you're making money by fading moves every day, right? Then you think, you're making money on the downside, but if you just zoom out, it's going higher. Maybe as a day trader, you're shorting every day and you're making money, and that's great. And you're seeing, in Kenny's case, these high flying stocks that go up 500% and then come crashing down, and that's all great. But I think a lot of day traders that I've met, they end up kind of getting more bearish over time because they see these gaps coming down every day, or these moves stocks being overbought, come back down, or overreactions to earnings, and they're making money off it, and then they sort of apply that to the overall market when that's not really the case, right? It just seems like a lot of day traders I know are just naturally bearish people, which is totally fine, right? If you can make money doing that, every day or every week, but every month or every year, it's hard to be bearish, right? So,
well, if you want to be a Darth Vader and you're looking at every high as overbought and you want to short into it, hey, to me, flip that around, and that's a buy the dip. For whatever reason, fading is seen as something really tactical, while buying the dip has been reduced to being a meme. I don't know why. I'm a buy the dipper. I love a trend when it goes on sale. What's the old saying? Wall Street's the one place they throw a sale and nobody comes. But but the squiggly line between a sale and a downtrend. So if someone thought, well, healthcare is on sale through 2024, that was a losing proposition. So I think the first thing is, what's the market structure? I mean, are we dealing with bullish chop? Are we dealing with an uptrend, or is someone confusing cheap with value? And that's always going to be the plague, what plagues most traders and investors.
Yeah, and that's one of the biggest things I learned from JC, because he's all about, hey, what environment are we in now? Are we in a bear market? Great. Then my bias is to the downside. Are we in a choppy market? Then great. My bias is to whatever range we've been in, right? We get to the top, I'm bearish. We get to the bottom, I'm bullish. Are we in a bull market? Bias to the upside. It's all about knowing the type of market you're in right now and applying your strategies to that. Also, I just think being bearish makes you sound smarter, Raghee. So,
when did jaded become wisdom? I don't know, but it's just not. Everyone I know who's done well the last 4 years, everyone I know who did well in 2024, they weren't the bears necessarily. They're the folks who understood that money doesn't go into the mattress. Somewhere we're going to have a bid. And that list might be shorter. Some quarters, that list might be extremely long. Other quarters, and it's just adapting to not falling in love with the fact that, I don't know, NVIDIA had a great Q1 and persisting and thinking that should continue. That's what I think hurts traders, that inability to rebuild a watch list.
All right. Raghee, it's been a pleasure to talk to you guys. Check her out. Her link to her Twitter account and her link page is in the description. Check it out there. Raghee, it's always a pleasure to talk to you. And we'll talk soon.
Good to see you.
All right. See you.
Thanks.
Ton of fun. Always great to talk to Raghee. She's I've known her for a while. She's great. Listen, I misspoke at the top of the show. I said that Jason Perez was joining us today. I was wrong. I had my weeks mixed up. Sam Gatlin, the senior Kansas correspondent at All Star Charts, is here. So let's bring him on and talk about whatever. I think they got just a lot of snow last week over the weekend. I don't know. Let's see.
Hey, happy Monday.
How are we doing?
A lot of snow, like you said. This is the most snow I've seen in Kansas in a very long time.
Really?
I got an Amber Alert type notification on my phone last night saying that the major state and federal highways in Kansas have been closed and you should not drive unless it's an emergency. So I've never seen that.
Wow. I suspect that's where Steve, I know Steve's not in Kansas, but I suspect that Steve is probably caught in the snowstorm somewhere. I know basically the entire southern half of New Jersey right now is in a state of emergency. Where I live, it's totally fine. I don't even think it's snowing right now. But that there's this big stretch from like Kansas to like DC that just getting dumped on. So if you're in that, Godspeed, I guess. And stay safe. Sam, what are we watching today? Biotechs? What's going on?
I wanted to start with slide number 5.
I like this. Okay, the x-axis is a little hard for me to see here, so I'll make it bigger. What do you got?
Yeah, so this is just an asset class overview. On the right side, you have the best performers. On the left side, you have the worst performers. So the best performing asset class in all of 2024 was gold. And second, you had the NASDAQ 100. That was followed by the mid-cap 400. I think gold has more upside. And on Friday, I covered copper as a potential catch-up trade. Plus, it's correlated to China. So if you're a China bull, you can go to the next slide. China outperformed the S&P 500, the United States benchmark, in 2024. I don't think a lot of people recognized that. It was a pretty choppy mess. You had a few major gaps that just retraced for a long time. It wasn't a great trend, but nonetheless, it did outperform. So if you want to be bullish on China, I think you got to be bullish on copper and gold alike. What do you think about that, Spencer?
Because they're pretty correlated, right?
Yeah.
Yeah. Yeah, I mean that makes sense to me. Wait, can we go back to slide? Can we go back to slide, please? Can we go to 5? Thank you.
Yeah.
I need to digest this for a minute.
Yeah, there's a
So,
lot going on here. So
yeah,
so the green dots are the max percent change, and the red dots on the bottom are the min change. So you could see that not only did gold close as the best performing asset class, but it also had the widest range. So like at the max, it was the best performing. I know stocks kind of sold off into the end of the year, so you could say that maybe stocks were better than gold, but just not at the end of the year. That kind of messed up the data, but that's not the situation at all.
Where would the S&P fall? I would see it would just fall. It would be like a big 3 at the front. It would be gold, Nasdaq, and the S&P. That's what it would be. Right, and then
right. So the S&P. I don't have the market cap weighted S&P, just the equal weight. So that came after the
the equal weight's a snooze fest. Right.
Yeah. Yeah. If you want to go to slide 8, or let's start with 7 on. So this is China. If you want to be bullish China,
Dude, I see this stock every morning when I look at my scanner and I look at what's up, what's gapping up and down in the pre-market. This thing gaps up or down at like 7 a.m. Like it seems like every day it's doing some sort of weird gappy shit.
Yeah, it's a wild stock, but
yeah,
nonetheless, if you zoom out, there is a trend here, and this is a textbook bearish to bullish reversal pattern. We buy these all the time. These are some of the best long-term trend reversal patterns you can find in the market. But this was the #1 performing stock in China, Kingsoft Cloud. I was looking into the company, and it looks like they're just trying to copy the Microsoft Office suite, kind of like the Microsoft Excel, Word, PowerPoint. They're doing all of that, but kind of spreading it around Southeast Asia, where I don't think Microsoft's had a ton of success there with their Office platforms. So it's a very, very large market, and investors seem to be front running the opportunity. Kingsoft isn't
China like an oxymoron, isn't it?
I'm sorry.
The best to say something is a stock is the best stock in China. It's like an oxymoron a little bit, right?
Yeah, it is, but nonetheless, this thing's moving, and you can make money. Like if you bought this several months ago, you're sitting on close to a 10 bagger. So
yeah, if you can take these overnight gaps like every day, right? Like I'm saying, so like you wake up and this thing is near the top of the gainers or the losers on any given day, right? So don't know what that's about.
Rachel's poking fun at me, saying I sound like I'm 45. I don't know if that's an insult or a compliment, Rachel.
I don't know either. I'll take it as a compliment. What else you got here?
The next slide, I believe, is slide 8. This is a good one. So out of all of the American stocks not listed elsewhere, this one is the #1 performing stock in 2024. It was up about 2,500%. And then if you go back a couple months, so it like bottomed in November 2023. If you benchmark from that low, then this stock is up like 7,000%. It's been an absolute home run. So this thing was left for dead by Wall Street. And if you go back to that last slide, I wasn't done there. So this company was just, as a lot of companies are in the market, they're focused on growth more than profitability. But you can see a sea change here in late 2023, early 2024. This company decided to just get rid of all of its money-losing ventures and focus solely on what's making the company money, and that is screening new babies for diseases, for rare diseases specifically, which on average, if you have a rare disease, you're born with a rare disease, it's not caught until you're 8 years old. So that disease has 8 years to progress in your body, and just
Jeez.
it's a terrible thing. So what this company is doing is trying to catch those diseases sooner. So they're trying to screen every single baby, which there's about 3 million babies born in just the United States each year. And last year they only screened 20,000. And that's because there's some type of organization for these pediatricians that set the guidelines. And right now the guidelines say that screening babies for rare diseases should be last resort. Like if there's something clearly wrong with you, like you're born with no bones or something like that, something that's where it's just blatantly obvious.
Well, I'll just speak from my own experience here because I'm kind of going through this now. My wife and I both got genetic testing. The doctor advised us to get genetic testing just to see like what we are carrying and what we could pass down. But we didn't do anything for rare diseases. That wasn't mentioned. That hasn't been mentioned at all. So I don't know. This is.
I would mention it. Say you want the Gene DX screen on your baby. It seems like most insurance plans are willing to cover it. And Gene DX is getting reimbursed about $3,000 for each one of these screens by the insurance companies. So it's a very profitable business. It's Theranos, but without the scam.
Okay. All right.
And then you pull up the chart.
You had me till the end there.
But the chart speaks for itself. You can't fight this trend. We've seen some V bottoms. Like this chart reminds me a lot of Facebook, Meta, Netflix, beautiful V bottoms. I think this one is just going to keep marching higher until it gets to that former all-time high. And you have a really, really clean bullish continuation pattern that you can trade. Really well-defined risk reward here. This is my best trade for 2025.
This is your best trade for the year?
Oh yeah.
Wow. Okay. Can we go back to slide 8 for a second? I just want to mention briefly, we're going to be doing a lot more fusion analysis here on this show, and you'll be seeing it more in All-Star Charts. That logo on the top left there, the beat report, that's a new thing that we are going to be, or I say we, I really mean Sam and Steve and company, not me. I'm not doing anything. They are going to be putting this out in a couple of weeks, and it's basically a fusion analysis of using the technical analysis that they've always used, plus a look at fundamentals, specifically reactions to earnings, right? So earnings, actual versus estimate, and then there was stocks reaction to that. Sam, I know you've been working on this for a while, so you're going to be going live with this in a couple of weeks. You want to tease it a little bit?
Yeah, this is what we're going to be covering. We're looking for the best stocks, and I think of it more as a rifle approach. A lot of technicians use more of the shotgun approach, and they'll just buy a bunch of bearish to bullish reversal patterns, and that's great, and that can work. But if you want to make an outsized bet on something that you have conviction in, you can't just use technical analysis. You need to dive in and investigate what this company is doing, and I truly believe that is how you can get outsized gains and make leveraged bets.
All right, stay tuned for the beat report. It's coming out in a couple weeks. We'll talk more about that as we get closer. And then if you want Sam's commodity research, the Gold Rush, he helps put that together every single day. I did drop the link in the chat just there. Sam and Jason Purrs work together on this, and they do a great job. Sam, you guys have been crushing it. So if you're interested in commodities and the gold, oil complex, what's going on in natural gas right now, there's always things happening there. And as Sam just pointed out, gold outperformed last year, which actually, I'll be honest, Sam, I didn't realize that. Yeah. I knew that it outperformed prior to election day. I didn't realize that for the whole year. It actually beat the NASDAQ. So
For sure.
Yeah.
I didn't bring a chart of this along, but just the chart of a major equity benchmark like the Dow Jones Industrial Average or the S&P relative to gold. There's been not much alpha at all in equities the last several decades relative to gold. I think that's a good thing
Relative
to
to
come back to.
gold, there has not been much alpha in U.S. equities.
Yeah. So like if you're just an index investor, you might as well just buy gold, take the company specific risk out of it.
I don't know how can that be?
I'll show you the chart later. I didn't bring it along with me, but
I mean, I'm looking at the price of gold long term.
Yeah.
Right. Yeah. And it did nothing for a very long time. And then obviously the last 13 months or 11 months, it blasted off last year. Right. But it did nothing for like what?
It's the long-term trend is that
how far back are you going here? All right. If you go back like the 70s, and sure.
I like to zoom out on my charts. Yeah.
All right. Okay.
Yeah.
All right. I was wondering where you got this from. It's from the 70s. Got it. Okay. Sequence of return risk is a thing, folks.
And Phil makes a great point here, Spencer. Your Disney obsession could be passed on to your kid. That's a problem.
I'm not following you.
We were talking about genetic testing earlier. Phil Blotsky in the chat.
Yes.
Says
No. I'm far from the most obsessed person that I know when it comes to Disney. I know people that go to Disney every single year, believe it or not. Okay. That's the thing. I've been to Disney World 3 times in my life, 3 times in 33 and a half years. So that's not a lot, but I know folks that have been to Disney every year, right? JC's one of those people. He just said it.
And do you think that's hereditary? Is that passed on to the kid?
I don't know. Just some people just love Disney, right? I am a believer in companies that I feel like will always be around for one reason or another, and that always have some kind of like underneath demand built into it, which I think Disney is, because like every kid loves Disney. So that's why I own it. I also just like owning things that I use, that I'm a customer of, that I patronize. It's why I own Costco. It's why I own BlackRock. I own their ETFs, right? I just like owning things that I use and that I spend money on. So
have you seen this stuff about the new Costco apartments? I'm kind of interested. I mean,
no, but that sounds like a story that's out of Idiocracy. They're building apartments on top of Costco.
Yeah, it makes sense. Like it sounds like they're not able to get the proper registration with the governments to build a Costco. So like if you build a bunch of affordable housing, then the municipality will let you build your Costco. But just imagine bringing a girl back to your Costco apartment,
that would be a terrible move for my wallet. But yeah, I think on Friday night we spent $300 for 2 people. 2 people. I have a 2-person household, right? Spent $300 at Costco, which to me was like a lot of money for 2 people, right? But I don't know. It's fun. Okay. Sam, let's get out of here. The markets are open. Steve said he'll be back tomorrow. So will JC. So will I. I hope you join us in the chat. Let's see. Today's Monday. So we have Gold Rush members. You'll get your weekly video today. Chart Report private access members. You'll get your video today. What else do we have today? I think that's it, actually. Oh, Chart Request Live. CRL. 1:00. I forget who's on today. Is it you and Alfonso?
I think it'll be me and Patrick. But
you and Patrick?
Sure.
Okay,
it's
that's at 1:00.
Great one either way.
Email your tickers in. Get them in. Questions at stockmarketmedia.com. We already have a few requests in, and that's what we got. Thank you to Raghee Horner. Thanks, Sam, for hanging out. Thanks, chat, as always. I appreciate you. Drop us a like. I'd appreciate that. Subscribe to our channel, as always. I appreciate that. Follow us on all the socials. There's our Instagram. There's our YouTube. There's our X, Twitter, whatever you want to call that. We are posting little short videos every single day. highlights from this show and others. So the guys are kicking ass doing that. They are awesome. Check us out there. And again, last day for Kenny Glick's Santa Claus Rally Sale. Link is in the chat. ASC premium members conference call tonight at 8 p.m. You've gotten several emails already about this. You'll get more emails today about it. So if you don't have the watch link, just go to the members area page and it'll be right there. And we'll see you guys later. Smash the like. Go make some money. Sam, catch you in a bit. See you guys.
See you guys. Have a good week.
I can't take no loss. I don't even know what it costs.